Markets around the world have been moving up for 7 days straight. And guess what? We've only ever seen this one other time. So, what does it mean when we have one of the biggest rallies that we've seen in almost 2 years? And why is oil dropping to its lowest price since July? Hello, ladies and gentlemen, and welcome back to the Daily Show where we discuss stocks, commodities, and cryptos together. As the S&P 500 reaches a critical supply and resistance zone, we get injections coming back in from central banks around the world, showing us that there might be even further moves to the upside. And of course, oil gets dumped, showing us demand destruction is in play. What's going to happen to one of the most important reads at the moment? And that's yields. Have we seen the low in treasuries? Today, we discuss some of the stats moving forward over the next 2 weeks that might surprise you. Well, welcome back, everybody, to the Daily Show where we discuss the macro lead indicators and, of course, the hottest charts together. If you like anything to do with markets, remember to subscribe and smash that alert button. It was down for energy and up for big tech, and we saw a bit of rotation occurring throughout the markets. We'll look at that later on today's show. But more importantly, let's start with some of the stats that are driving the markets right now. First up, an amazing stat. 40 years of history, the S&P 500 has only ever had 2 times where we've seen 7 continuous days of rising after the 100-day low. The last one was March 20th, 2003, and that signified a conclusion to the bear market. Obviously, the other one was right now at the time of this recording. If you want to see more stats like this, remember to follow us in the links in the description on our X account. Now, let's talk yields because these are some very interesting stats. What do 30-year bond yield performances tend to do between November 6th and 26th of every year? You might see some surprising statistics here where, in general, yields actually move down over this time. Now, what's that good for? Of course, it's good for treasuries. TLT in particular could benefit from this. Now, we've got an up 10 to down 30 ratio. That's a pretty big statistic. 75% of the time, it will be negative over that period. And of course, we've just started into that zone. So let's talk about whether the Fed is done. This is a discussion that we brought up in our previous video, and it talks about 1 month, 3 months, and 6 months into 12 months later after the Fed have stopped hiking. We are now over 3 months since the last hike. We've also followed a very similar statistical path. Now, after we get into the 6 to 12 months, markets generally have actually returned to bullish 80% of the time. So are we at that point? Well, here's an update of the latest in terms of what's going on with forward yields. And you'll notice that there's a big shift that's constantly happening, especially at the tail here of 2025. The expectations by the street are that we're going to get further cuts and that maybe we're going to see economic instability or at least slowdown that really means that the Fed has to come out in major support. This is as the 7th of November. And of course, you can see here the different dates going back. So there's been some big shifts in the tail, big shifts in general where the expectations are. At this stage, it looks like the first rate cut would be kind of just after the first quarter of 2024, according to the market. Now, as many of you correctly said in the comments section, they've been wrong almost all the time. That is, the market's been wrong. Yes, but I think we've been able to smell it out most of the times. And in this case, I would say that it's highly likely that we're really close to the topping for the Fed. Now, whether they get a rate cut in Q1, Q2 of next year, that's questionable. But in terms of being very close to the top, I'd say we're very much within the last kind of 25 to 50 basis points. You may disagree, but that's where I kind of feel. I feel like we could have already put the pause on. Let's talk about what's happening on the equal weight market. We discussed this in the previous video. We talked about this being a supply and a key level. We'll look at the equal weight later on as we cover the charts. But just remember, we saw some massive percentage moves. And if you go back through history, this is all normal for a pretty significant rally. You can see here when these things happen, we often go into a rally point. Sometimes we get lucky enough to get a secondary pullback, but when it does occur, it's a big deal. Previous ones, very, very powerful percentages, specifically when we see the 20 go so much more, which we've seen before, and we'll look at later on today. Now, what about the Zweig breadth thrusts? Well, this is a big deal. Of course, it's very rare. We don't get too many of them. This is going back many, many years, all the way back to 1945, and we've just seen a thrust that generally brings with it a pretty good 12 months, and in fact, it brings with it almost a 100% track record, not quite, but almost through the next month. Now, at this stage, of course, we've had it running since November the 3rd. So a pretty good read, very rare, and usually brings a decent amount of bullishness with it. And these are the types of things that we're seeing in this market at this stage after that correction. Here are some other reads for the same thing, just showing you on a chart visually the last couple that have happened. And I think one of the things about 2015 and 16 that's surprising is that we obviously get that thrust up, then it pulls back, giving a secondary entry, and then, of course, ends up rallying through. So remember, each time is different, but ultimately the stats over the next 12 months generally are bullish. Here's another way of reading the data if you wish to pause the video and check that out. And another one that's happened here is a Whaley 5-day thrust. So there aren't that many of these either. Again, fairly rare reads, something we actually haven't seen in a very long time. And we just got another one. So when we tend to see these, do they have statistical variances? Yeah, of course, but they do tend to be bullish overall over the next quarter, over the next 6 months, over the next 12 months. So it's important to state that these things aren't that common. When they do happen, we need to be paying attention. We also got the Russell 2000 cycling as well, with a different cycling stat, which is a 52-week low to the best 4-day gain in over 3 months. Again, fairly rare stat. Again, 12 months later tends to be bullish. So what that really means is that, of course, we should be following price action, which we'll be looking at later. We should be following positioning, which helped us to identify together the Wall Street level that we thought they would bounce off. That was that 4120 to 4150 zone that it turns out was the level that we saw the bouncing. And a lot of that had to do with sentiment. We already talked about sentiment turning super negative on the charts. And we also discussed the idea of put call premium as well, where basically retail traders, unfortunately us, the small traders, what happened? We got trapped in puts again. Everybody started to buy puts. We ended up going to a bit of an extreme level. And of course, the market said, you know what, I'm going to squeeze that out. 7 days straight bullishness. Yeah, I think somebody's unfortunately been hurt by that one. If it is you, well, you know, it sometimes does happen to any of us. And we just have to shake it off and say, okay, hopefully we practice correct risk management in that procedure. Now, what do we expect for the rest of the month? Well, we've been talking about this idea that in pre-election years, often the old market is a little bit more sideways. We get a rally into maybe a little bit of a pullback into a fairly strong rally at the end of the month. Now, it doesn't have to work this way, but of course it is something, it's at least a guideline to go off and something we will be looking at. Now, what about earnings? There are still earnings in this market and we need to be paying attention to them. Obviously, earnings have been sitting at a 70% beat rate so far this earnings season. So it's not too bad. It's pretty normal. 67 to kind of 73 is pretty normal at this time of year. We've got Disney coming up. We've got Twilio coming up as well. And if anyone even cares about this thing anymore, we've got AMC coming up. I'm sure it's not going to be an exceptional earnings report, but we'll find out. Let's move over to gold. I'm just keeping this real. I think the squeeze thing is still in effect. Obviously, gold's selling off over the last 24 hours. But, you know, pullbacks are opportunities if the right signals happen, and we will be watching that. Let's go over to unusual volumes. What did we see happen? Well, we did get a little bit of a large trade here coming through from the S&P 500, and we saw, you know, a little bit of a rally coming through after that. So look, we could argue that somebody did buy the S&P 500 for a little trade there, but most importantly, we made a new high, and we'll look at that later on because we thought there was one more high in this market before it was probably going to sell off. We've now got that high, and we've got, more importantly, market structure forming, which is awesome. 3x bull shares, I shared this one yesterday. I shared it in the previous video just to show that there were some large transactions. They could still be sells. You might say, well, Tom, they're buys because we went up. No, they could still be sells. Remember, they don't have stop losses like us. What's happening here is it could be just a rally into a bit of a sell-off because a lot of you are looking for opportunities. I understand that. We're looking together and we'll be checking it out. We also got an unusually large transaction coming through from Adobe right into these highs. Again, could be a buy, most likely a sell at resistance or supply. So something to be watching on the smaller structure. Let's move over to one last one, which is just junk. We continue to see fairly large transactions coming through on the high yield bonds. I'm not sure whether these are sells or buys or whatever they are, but in general, there are some large transactions coming back into the junk bonds. So something to be watching. Check it out. Look at the structure. That's the key. Let's move over to options before we go to charts. First up, was there any unusual activity? Well, most of it was to do with earnings. I got to say, I've always liked D-Dog, but 28.5% on the earnings result. That's incredible. Snowflake, another one we've looked at many times in the live stream in terms of structure. Nice 10% up there. So some of the quality hyper growths, they're doing okay. Datadog 8.37 times on the options volume. That's of course to be expected. And we're still continuing to see, a lot of people fighting in the Russell 2000. While options were down, they were still up on the 9-day volume. And you can see here bull calls to puts. Interesting one, because we've always seen huge amounts of puts. Suddenly some calls starting to come back into the Russell. I feel like it's really bottoming off in terms of how many puts are being placed on that. Let's look at the volume, though. It wasn't that big, 34.9, so basically 35. 39.5 is normal. 53% calls to 47% puts. So, is this important? Yeah. We continue to see a decent amount of stacking of calls on the day, and that's telling me that we could, again, just be near that prelim top for now until we maybe see a correction, a little bit of a pullback into hopefully a move again to the bull side. Let's talk about percentage of stocks above the 200. That improved greatly. We're still looking for a 40 plus read on this ideally. If we talk about percentage of stocks above the 50, that obviously did very, very well last week. And here is percentage of stocks above the 20, which really tells us that, again, it's kind of that probably put the bottom in markets, at least from a technical perspective. That's generally the way you'd play it. Skew holding at the top here, so you can see holding at the range. Again, that's consistent with basing structures such as what we saw in October and December. Let's talk yields now. US 2-year, that came back and is kind of just finding some resistance right around that bottom trend line. We've talked about the first time frame change of trend. Obviously, a lot of people don't believe the top's in for yields. I'm just looking at what we're seeing on the charts. There are some signs that is occurring. US 10-year, you can see here again, weakening off. But let's have a look at the US 30-year, just because we put that in today's stats. So let's have a look at that one. It looks very similar to the 10, and you'll notice that we're right at that alert level. I actually haven't had my trigger alert from the 30-year yet. So statistically, we usually see negativity around yields at this time of year. Will we get it again in the 30 and therefore, see that long tail start to really drop off? No change of trend on the 30s yet. And if we bring up US 20Y, which obviously is the one a lot of people look at, again, no real change of trend, no real anything at this stage. It's just basically saying, we're on demand. We could still move up, something we are looking for. We spoke about the idea the Fed have been injecting. Here are two representations. The green one's the Fed. The rest of it is the rest of the world. And both central banks around the world and the Fed seem to be using some of the tools and kind of supporting the market. I've long theorized that this injection here was a break of the market that we don't know about yet. Something happened. Who knows? I don't know what it was. But basically, we saw this huge rally coming through on everything. And that kind of points towards, some support here. And again, the system is broken. And unfortunately, we have to watch charts such as this. So make sure to subscribe if you're interested in these types of things. US 2 versus 10, we're looking for this to be a recession reader. No uninversion. So at this stage, no movements. We'll have to see whether that happens. I would say it's probably going to be if the Fed start rate cutting. What about Dow Jones Transportation Average Index? Held firm, but didn't really sell. So again, no signs of weakness yet in this current rally, although it has stabilized, which means that maybe there's a little bit more weakness than we think. Home builders were the same, kind of just floating around this zone. So again, they're behind maybe the tech stocks at this stage. So it's showing you that the recovery might be running out of steam in the broad base. And if we move over to copper sold off, then found some recovery. Again, moving through our downward trend line was a big deal for copper. And I feel like it could have put a low in, or at least a temp low. And if that's correct, then we could be looking at further rallies coming into the Chinese New Year. Remember, we've got things like iron ore, we've got things like copper. These types of things do tend to run okay through the rest of the year, specifically December and January. Let's go to RSP, still at the high. Did equal weight go up? No. So what's that telling us? Well, there's some weakness in the market in terms of the internals. So if we go down to the 2 hour and we have a look, it's not like it was rallying while the rest of the market was making new highs. What was making new highs? Technology, semiconductors, these types of things. We weren't seeing really new highs across the board. So it wasn't a broad-based rally, or it wasn't a broad-based buy in the last 24 hours. Until we get through this level, which is about 143.50, we won't really be sure that the whole market has started to recover. It's just at this stage the high gamma that's coming through. Let's move over to the dollar index. We theorized that we'd get a bit of a bull move. We did. At the time of recording yesterday in the previous video, we talked about it here and we thought there would be a rally. Actually, quite a nice fill. I like that level of fill. I'm not sure if I'm willing to short the dollar here. I think it's still possibly long into 106, but a nice move for it. And there's some good trades on currency this week. Actually, the euro, the dollar, a lot of things kind of trading around and finding key levels. So I do think the dollar could be still in an upward trend. It's possible. It depends how it reacts to this demand. So we're seeing so far bullishness. If we end up squeezing through the top here, it's going to be brutal. Dollar bears will get slaughtered, and we'll talk about that if it does happen. At this stage, I've still gone neutral bearish for now. So yeah, we'll keep updating as we see fit, but we're looking for traps. And yeah, I'm pretty happy with that little rally. I could see maybe even a little bit more coming through. Let's move over to gold. How is gold trading? Well, of course, gold is stuck. And why is it stuck, you might ask? Well, it went into a huge rally. Came back to the 20 moving average, found that demand, ended up buying off. You can see the wick here on the current daily. And of course, the weekly would be interesting to see a big wick come through. I've long theorized that gold is going to make a new all-time high over the next 3 to 6 months. And I still think that is very possible. If the Fed do start rate cutting in the future, or at least that becomes more of a thing in the long tail, I expect gold to do better. It's the oldest currency. It does tend to do okay when it comes to rate cuts. Gold stocks still inverted head and shoulders, no breakout. So, it's more of a guess at this stage, but still in that key zone, having a bit of a poor session. And US oil got absolutely destroyed. So this one here, I feel like we've been on it. We haven't seen those bull run rallies that we thought that we may be able to get, which was 83.61. We didn't see those wicks take out, so therefore we stayed to the bearish side, neutral bearish, and it moved into the most traded zone. Do I buy oil here? No. Do I like oil here? Depends on structure. So at this stage, it's still actually negative. And if we go over to the weekly, you'll notice that we're just through the 20 moving average. We did that last week, really. We're moving down. We could go to most traded zone number 2. We just went to most traded zone number 1. If I was short this market, this is a great TP level. So extra TP level. And it just shows you time and time again that, the narrative was, oil's going up. Look at this. Everything's going crazy. And then look where we are now. So what the reality is to the narrative, the news, because I want everyone here, we have to remember, the news story was what? Buy oil, oil's a sure bet, everything's getting crazy in the world. We have to, it's going to get, tight and constrained. Well, that's not what the reality of what we've seen on the charts is. So remember the news, the narrative, you become liquidity for the street and liquidity for these bigger players. And that's exactly how it's playing out. And you can justify it any way you want, but ultimately it's the same thing time and time again. A great classic, if you want to go and have a look at it, is the Australian dollar. And in fact, you know what? Let's do it right now. The Australian dollar, you might say, well, I don't care about the Australian dollar. Fair enough. But I do. And therefore, let's have a look here together. And basically what this was it was a rate hike expectation. Okay, great. It comes into, guess what? A supply. And guess what happens? We get the rate hike. 25 basis points. What's the reality? It's a buy the rumor, sell the fact. And we see a massive sell-off come after that. And people are probably left scratching their head. How could that happen? Remember, price action is the ultimate one that you should be checking out, not the narrative. The narrative is that the dollar obviously should go higher based on the interest rates. Well, it did, but it did it before the event. It was like 80% packed in. So the reality was that, when it did happen, we're going to sell that off and trap retail traders. It just shows you again, time and time again, the narrative is so important to break down and understand what the real market action is telling you. We could definitely call that in our private community before. Links in the description down below if you're interested. Let's talk about Tesla. Okay, so 227. Yeah, Tesla looks okay, I guess. Look, I've been talking about wanting a pullback to fill the gap. We're only going to get the fill the gap if we get the S&P to actually sell off here, which I still suspect may occur. And it's doing the right trapping kind of events at this stage. But yeah, Tesla is, I guess you would have to be bullish on it. But I would like to see that gap fill, 205. So around here, making the new high is important. but no significant move out yet. 227 obviously for the more squeeze move into 242, but no breaks at this stage. AAPL did a very good session, so Apple coming through with the goods, another really strong move. It was a shame it had to make a new low, actually. This was an excellent zone for Apple, but it's triggered a lot of our buy levels now that we've had set. And it looks okay on the charts. I'm not really a huge fan of the Apple chart at this stage. I think there are so many better ones in the markets, but this is a strong weekly close should we get it. And now let's move over to XLF. I want to talk financials for a second. Financials, I expect to be pulling back. They had a great rally. I'd like to see them pull back again. This is consistent with a SPY pullback concept, and then we see a rally back through. And yeah, I mean, XLF's done well, but take a look at KRE. Regional banks, often if they are doing poorly, the economy is pretty sick. Again, exceptionally good breakout levels, obviously pulling back here early. So KRE actually starting to show signs of pullback, and that's telling you something. It's saying, well, maybe, we could go a little bit lower here. And I'm looking for, a pullback into strength. So KRE starting to weaken as the rest of the market keeps, trying to be dull and moving up slowly. They say don't short a dull market. I would tend to agree with that. Let's move over to the Oz 200 on the resistance trend line. Nothing else to report, expecting pullback. The German 40, that's the exact same thing on the resistance trend line, slowly kind of putting down. Now, some people could say, well, that's a flag looking to break out. If it does break out and we continue to see strength in the S&P 500 past this point, then we're moving up to here, 15,600. So the next area to go would be that area. And of course, we'll set alerts. We'll set an alert right now for the high to see how it plays into that kind of concept. What about CQQQ coming into the Chinese New Year time? It's doing okay. Again, has this broken a trend line? The simple answer is yes, it has. Broken out of a trend line, finally back to the level that we talked about so much. So that 37 finally coming back in. And as we mentioned, it was not a trade, it's necessarily a position. And in this case, we're starting to see some improvement out of the CQQQs. If they're going to run, it tends to be into the Chinese New Year, which obviously happens early in 2024. We'll see whether that can occur. Here's the US 2000, not much to report on the Russell. The Russell just kind of literally stayed flat for most of the session, so it was a bit boring. But we can move over to the NASDAQ. Now, this is where we start to get some nice structure. So have a look at the daily first. What happened here? Well, first up, we came up and we tested those serious highs. We've put in, look how many there are, 1, 2, 3, 4, 5, 6, 7 bullish sessions. Wow, that's incredible. 7 bullish sessions, getting on the statistical improbabilities. 1, 2, 3, 4, 5, 6. Yeah, 6 to 7, very, very rare to get these types of runs. And when you do get them, you are definitely looking at a pullback. And of course, that means that you've got to be very, very, very statistically aware of what tends to happen next. Now, while this 7 did start the last bottom, what it generally will do after that is something like this. So be careful here. We're right into that high. So set alerts for the new highs, set alerts for how the market structure ends up playing out. And I'm also looking for a break below this level here, which is 15,050. So basically, if we can get below there, it could be a big sign for the temporary bears to come back into the market. Let's move over to the S&P, or maybe a permanent bear, and you want to look at that as well. Fair enough. S&P 500, again, put in the new higher high, which we thought they would. And I just want to kind of reiterate as well. Let's just go back to the NASDAQ here for a second. Let's go to 15-minute chart. So we talked about the previous video that there could have been a short in here, and it kind of like floated down and then, of course, broke that level. So it just shows you, we had our suspicions that the market would want to go to a new high and trap, and that's exactly what it did choose to do. It's just like more of a, seeing this enough times and it's dull and it's slow, and these are the types of things you don't want to usually short. So S&P 500 closes right on those highs in terms of the SPX. We've got a gap fill just above 4,400, which would be a perfect level for it to go to. Certainly one we'll be watching over the next 24 hours. And we've got alerts set up there. We also have some structure on the smaller time frame. So let's go to a 2-hour and have a look. Here we have a low. So 43.46. I think that's a pretty important level for the market to be breaking below. And we'll see whether it can do it. So kind of got this. If we do that, then we could be moving down somewhere like around here, which we've already specified, 42.40 could be an interesting level for the markets. So looking for some weakness, but just need to see an actual turn. At this stage, it's just rallying and rallying and rallying and not changing trend on any significant time frame. All right, let's move over to Bitcoin and Ethereum now. Bitcoin continues to grind higher, dull. I don't like shorting dullness, bad looking chart to short in my opinion. And the same thing with Ethereum. It just keeps grinding higher. So could we be seeing a turn? Hey, it might be coming. You could argue that you've got a short right now on Ethereum in terms of this is actually a little bit weaker overall than Bitcoin. But it's like a very short time frame. You've got to be very, very careful and practice the correct risk management. I would say overall it's a dull market. It's very tough to short, and therefore it's probably not worth it. Let's move over to the big news. Of course, Powell is coming out to annoy us hard, 9:15 a.m. at New York time, and Fed Chair Powell will be annoying us. Then we go through and we get some other economic data around the world, and Thursday we get Fed Chair Powell annoying us again, which is great. And then we get prelim UOM consumer sentiment. So look, it's going to come down to Powell. We kind of suggested and thought about this week, and this was thanks to all of you out there in the community. We theorized that we would get a little bit of rally into the Powell, and then maybe the Powell would bring the bear train after he kind of reverses some of the things he says or clarifies them in his. It's amazing how much power he has, yeah? Clarifies what he said or something like this, and the market would freak out. Now, will that come to fruition? Well, it has been 7 bullish days, so certainly one to watch. If you enjoyed today's video, remember to subscribe, smash that alert button, and we'll see you in another daily recap show, of course, after tomorrow's session. Bye for now.